Hi there, welcome to Kneppy Invest and welcome to the 10th of June 2025. Time is currently 2:31 p.m. So about an hour and 38 minutes left of trading today on the first day of the trading week, even though it is Tuesday. Now, before I get into the agenda or the plan for today's video, why don't you support me? Why not? If you want to buy me a hot chocolate, I do have the link in the description of this video. So you can buy me a $2 hot chocolate, $5, $15, $20. Also, if you really want to, leave a question for me to answer because I'm looking to bank about, we'll say between 50 and 70 videos for the trip I'm going to take to United States and Canada. So this is September, October, and I do want to pre-record that many videos. And to do that, I do need some questions from you, some ideas. I was almost about to bank my first video today, analysis of PepsiCo, T-code PEP on the NASDAQ. I might do that over the next few days. So if you do want to leave a question, sort of like what Black Top Images has asked, would like to know what amount you consider to be too low to bother investing in individual stock. I've been too scared to dump multiple thousands of dollars, but I'm sort of tired of only making $500 to $1,000 profit of stocks that have run up 35 to 50%. I keep regretting not dumping 10,000 in these stocks to begin with. So questions like that, questions that are not time dependent, if that makes sense. So for instance, what's a time dependent? So any sort of technical analysis question is time dependent because technical analysis only works when you're talking about that company. So I can only release those videos on the day or near the day because the charts change fairly quickly. But if you want analysis of a company, particularly a long-term analysis, for instance, when I'm going to talk about PepsiCo, that's more of, is this company a high-quality company? And the quality status of a company more than likely won't change over a 3-month period. And any sort of questions, for instance, there was a question about the difference between Appendix 4Cs and Appendix 4Ds. That's not going to change. So I can do those sort of videos. So any sort of video like that, any sort of question you'd like for me to answer, leave that in any comment section of any video that you see. And I might bank that particular question during September, or to be released during September and October. Okay, so that's about it for what I want to do before I talk about the plan for today's video. Now, there has been some economic news released today in regards to consumer confidence in Australia and also business mood, a mixed bag. Also, after I've discussed that, we'll have a look at the ASX today. Have a look at the best and worst performing sectors, indices, also companies. Then we'll have a look at the top 5 stocks of the day. Before that, I might just briefly mention some of the companies that did not quite make it in the top 5. And then we'll have a look at the chart of the day. A company that initially was in the top 5, and then I pulled it out and made it chart of the day instead because the chart looks sort of interesting. Okay, so let's get into some macroeconomic news via Training Economics. Australia consumer sentiment softens is the leading or the top topic today. So 0.5% month over month to 92.6, a sharp slowdown from the 2.2% gain in May amid lingering uncertainty. There's that word again, uncertainty over global trade. Still, it marked the 4th increase this year, supported by the Reserve Bank's May rate cut and signs of easing inflation. But, so that's slightly negative, but on the positive side, Australia business mood rebounds. Index rose 2 in May 2025 from -1 in April, turning positive for the first time since January. Anyway, so that's that. Looks like there are some optimism when it comes to US-China trade talks. Oil rises as traders eye US-China trade talks, yeah. But UK retail sales growth slows sharply in May. Now, just because US and China are talking trade doesn't necessarily mean anything's going to come out of it. They're just talking. Anyway, so that's the macroeconomic news. And I'd say I don't think much of this would have swayed our market to go up or down today. I think most of the reason we're up today is because NASDAQ, Wall Street was up pretty big on Friday session, not so much last night, but futures, American futures are up a fair bit today so far. So NASDAQ is up 0.43% and Dow Jones up 0.26%. So I've no doubt that has been driving our market forward today. So let's have a look at the ASX today. So a pretty good day, apart from maybe small caps and even mining. So even though they're both up only slightly, small caps only up 0.01%, and techs had the best day, up 1.2%. And looks like they've been grinding higher all through the day. Well, maybe not all through the day. It looks like they reached a peak at about 145 and have been moving down since then. So over the last 45 minutes, we have seen the indices push back a little bit, maybe a little bit behind, because I should also mention the XJO is very close to all-time highs. And I'd say this is the second best day we've ever had, because it's just close to, which is amazing when you think about it. Still a lot of uncertainty in the world when it comes to tariffs. All these tariffs that were supposed to be put in place 2 months ago, and remember there was a 90-day pause, that 90 days is coming to an end soon. So even though there's still a lot of uncertainty, the market's completely ignoring that uncertainty right now. And I'm still finding it really interesting when it comes to all these YouTube people. There was one I was looking at today, I was going to watch today. Who was it? I forget. I'll just have a look at my phone. Hopefully it's on my phone. No, it's not. I got rid of it. Manarino. I remember watching some of his videos during the COVID-19, and I totally forgot about him. And then it just popped up on my YouTube, what do you call it? YouTube thingy. And I was like, oh, I forgot about this guy. Yeah, he's a fairly big bear as well. And anyway, Manarino or something like that. Anyway, so even though there's still a lot of bears out there, the market is still pushing higher, which just shows you that over the long term, bears don't win, because over time the markets go up, indices go up. So it does pay to be optimistic most of the time. Best performing sectors today, discretionary up to 1.41%, IT, financials having a pretty good day. Not going to talk about that. Energy up 1.16%, and the only sector down has been industrials. So why industrials? What's in industrials? I'm trying to remember if Transurban is in utilities or industrial. You can see Staples only up 0.03. So I'm assuming we have seen some bit of selling in more of the defensive companies. So I'm thinking Transurban, Telstra, those sort of companies, maybe even Woolworths. And we'll be able to have a look when we have a look at the ASX 20. ASX 20 is actually up 0.9%, driven higher by the banks, because ASX 200 banks up 1.29%. Just insanity. That's all I'm going to say when it comes to the banks. And gold's had a really negative day, down 2.37%, because there's a lot of optimism in the world, which means there's less people thinking the world's coming to an end. And even if the world does come to an end, gold's going to be useless anyway, because everyone's going to die if the world's coming to an end. But anyway, so gold's being sold off a little bit. Now, in saying that, gold, I don't think chart's looking all that bad. Let's have a look at gold. Yeah, gold chart's not looking all that bad. I think it's just a little bit of pessimism in the market, a little bit too much pessimism in the market, in my opinion. So let's have a quick look at the ASX 20. So I'd say about 4 or 5 companies are down. Give myself a bit of leeway. 5 companies down. And which 5 companies are these? I'm going to say Telstra, Transurban. Oh, what else? Telstra, Transurban, maybe Woolworths, and 2 others I can't think of right now because I'm going to get them wrong. I'll say Bramble. No, I'm going to go to another one because that's up. Let's have a look. Transurban, Woolworths, Rio Tinto, Telstra, QBE. Yeah, there's no way I would have got Rio Tinto, QBE. I thought Transurban, Woolworths, and Telstra would have been good bets because they are defensive by nature. And with this sort of move and this bullishness we've seen in the market, it's not surprising more defensive companies are being sold off and people are becoming a little bit more risky, a little bit more risk on. Best performing companies, tech companies, yeah, Aristocrat and REA Group, and real estate company Goodman Group up pretty good as well. And the banks, particularly non-CBA banks, doing fairly well. And there's also WiseTech with Woodside coming up just behind it. Okay, so let's have a look at the top gainers and top losers today, just to see if I've missed anything. I don't think so. Icetana did a deal with SoftBank. Talk about that company in the top 5, up 87.5%. Krakatoa Resources up 50% on, what did they do? Oh, they're going to start drilling. Yeah, they're going to start drilling. I don't get excited about that sort of news. Wow, whoopee-doo, they're going to start drilling. Wow, sensational. They're going to start drilling. Yeah, preparation for drilling underway. Oh, fantastic. Excellent. Yeah, I don't get excited about that news, so we can move on. And plus the markup cap's 9.3 million. What else? There's nothing here. Firstwave Cloud Technology. That's in my top 5, up 23.1%. And nothing else I want to talk about there. Top gainers by market cap. Zimplats. Well, Zimplats just going bananas, isn't it? Zimplats had a really good Friday. It's up 15% on Friday. So another 15% on... Look at that. Look at that. Is this... I'm not sure if this is justified or like this is just day traders getting really excited, but that's a pretty significant 2-day move for Zimplats. Probably should be the chart of the day, to be honest with you. And look at the volume as well. What a significant move. I would say this was just based off, I'd say there's trading, like either momentum trading, day trading in this, because that Friday session was really interesting. And I think based off the very fact that it did open up significantly this morning, it's just trading, day traders and short-term traders. What else? Clarity's had a good day. No complaints from me. With Silex Systems up, I'm assuming Uranium's had a good day. Minerals 260, never heard of this company. MI6. Why have never heard of this company? Markup 289 million. Is this a recent IPO? I would have noticed this company with that sort of ticker code, MI6. I would have noticed this company. Let's have a look. Exploration company in WA. Let's have a look if it's a recent listing. Okay, no. Minerals 260. Minerals 260 set to list on ASX tomorrow. Why have I never heard of this company before? That's really interesting. And sometimes these sort of companies you just miss them. Minerals 260. Okay, what else do we have here? Oh, Noble Oak. I thought maybe Noble Oak, there could be some value in that company. Up 9.06% today. I don't think that means that company has broken out or anything silly like that. But let's just have a quick look at Noble Oak's chart. Yeah, nothing. I think it's just a bit of noise. We'll just call it noise. And that's it for the top gainers. On to the top losers. I know what's going to be number one or the top loser, and that is also the stock of the day. Monash IVF. There was no debate about the top stock of the day. Had to be Monash. Share price down 25.5% on another mix-up. Can you believe it? And I'm going to be honest, I bought some shares today. I think this is a bit of an overreaction with the share price down a quarter on this sort of news. I think there is a chance that this is a complete overreaction from the market. There's also a chance that this could be just the first in line of serious mistakes from the company. It's because the second one in a row. What's happening with PRW Holdings? What's happening? They didn't release anything today. Pretty big volume. I have no idea. Pretty sure they did not release anything today. No, they didn't. Was there some sort of broker report for PWR Holdings? Down 11.81%. I'm just going to down 11%. June 10. Why? See if ChatGPT says anything of use here. I'm skeptical it will. So it says number one factor was a guidance downgrade in November 2024. That's already been priced in. Market reaction, no. So there's nothing of note here. Yeah, so I would assume, without knowing anything why the share price is down, I'm assuming there was a broker downgrade. Or maybe there was, founder and managing director takes medical leave. Maybe something bad's happened there, but they have not released anything in regards to that. Or maybe there's some rumor. I have no idea. No idea. If you know, I'd love to hear, because Share price down 13.5% is pretty significant. I could go to hot copper, and I'm going to do on my second screen here, just so you don't see my name. Just so you don't see my name, because you can't change it. Once you got your name in hot copper, you can't change it. I wanted to change it. I wanted to change it to kneppyinvests, but they wouldn't let me. Oh, jeez. There's nothing here. There's like 7 comments. Last most, there's only been one. Oh no, there's been a few comments released today. Yeah. Okay, so there was a couple of questions why the share price is falling, and then someone put a link. While every team on the Formula One grid is facing a regulatory change coming 2026, some outfits will have more on their plate than others thanks to a change in power unit supplier. Okay, I have no idea. If you know, I'd love to hear why PWR Holdings is down 13%. Maybe it's because of this little article about F1. Okay, the other thing I've noticed here is Loxley had a really good week last week, I think, down 20%, and Dateline Resources also had a good week, down 12%. This is just a bit of profit taking, and you're always going to see that when share prices have taken off. You're always going to see share price of companies pull back. In fact, it would be surprising if they don't. Now, a list of top losers by market cap. West Africa Resource share price has pulled back a fair bit. I think the market is now overreacting, and this is a little bit oversold. What else? Pepper Money. I think Pepper Money also showed up in my potentially cheap companies. Now, another reason why West African share price could be down is just because gold's down, and Black Cat Syndicate is also down 6.32%. Although they did release something was it Black Cat Syndicate released something, or was it someone else? Oh no, it would have been someone else. Who would have been? I don't know. And what else? Platinum Asset Management share price just keeps on dropping. Coronado, they did release something today. Share price is down 9.46%. Now, the reason that's surprising is I expect the share price to be up. Yeah, here we go. Because in Capital Brief at 11:33 a.m., Coronado shares climb after 230 million Stanwell deal. And I thought, oh yeah, that makes sense. And now the share price is down 9.46%. This might be a little bit interesting. We might have seen a fair bit of selling coming in today. Yeah, we have seen a lot of selling, really big volume coming in. Let's have a look at the 1 minute chart. This is going to be really intriguing. Oh yeah, because the share price opened up 23.3%. Now the share price is down 9%. So it's gone, share price has gone from 22 cents to 16 cents today. There are some people who bought some shares in Coronado today on open, and they have seen their holding or their value in their holding drop. What's that, 25 or 25%? Well, 30% in a fairly short period of time, in less than a day. And you don't usually see that. You don't usually see that. You don't usually see someone buy in on open and then see the share price or the value of their holdings drop 30% after what they perceived as good news. So that's a little bit of a surprise there, Coronado. And that's it. Well, Vinyl Group's back to trading too. I did see that, back to trading. Okay, so now on to the top 5. But before we get to the top 5, I'm just going to go through. Oh, I forgot to start timing this. No, I didn't. Before we get to the top 5, a few of the honourable mentions, fairly briefly. JLJ, Johns Lyng Group. Looks like there are some rumours of a takeover bid for Johns Lyng Group. I would be really upset if the management suggests this is a good deal because the share price has dropped a lot. This seems like it's opportunistic. Share price has dropped a lot, and I would be absolutely furious with management if they say, yeah, we should accept this deal. This is without doubt an opportunistic takeover bid, rumoured takeover bid by private equity. So hopefully management do what they should do in this sort of case. And the other thing is, we've seen some bit of flooding on the North Coasts and Hunter Valley of New South Wales, and I'd say Johns Lyng Group could be getting some work out of that. Just a little bit of a tidbit there. What else? Jenica. Share price down 8.92% on the FDA said their drug application needs more work or something like that. Received correspondence from the FDA that has placed a clinical hold on the company's investigational new drug application. The FDA has indicated that the non-clinical data package provided in the IND is not adequate to support initiation. So the market doesn't like that. So let's have a look at the chart. Is this concerning? Is this like a sort of a trend killer? And I would say no. In fact, the chart looks like it's going sideways. And the last one was ANO, Advanced Zintech, share price up a little bit. They're expecting a profit this year. Expected 2.7 million profit turnaround. But if you have a look at the chart, I do know what this chart looks like because the share price has been going sideways for the longest time. And when I say sideways, I mean sideways. Look at that. Share price fell a lot. Look at that. Well-defined downtrend for quite a few years. We're talking about 6 years. Share price reached a high of $7.50 back in 2019. I remember this because I was actually a holder of this company back in 2016-17, and then I missed all that massive increase in share price because I sold out. And the share price has come all the way back down, but share price has been going sideways. There's no interest in this company at all, even when they release an announcement saying they're going to be profitable by a nice little amount. Okay, now on to the top 5 stocks of the day, and then we'll have a look at the chart of the day. Now, I'm going to start off with Firstwave Cloud Technology, but before I talk about Firstwave Cloud Technology, I'm just going to briefly discuss Vection Technologies. Now, both companies released something that was sort of interesting. They're related in a way. Now, Vection also released a presentation today. Vection launches Algo AI sign language on AWS Marketplace. So Amazon Web Services, Amazon Web Services Marketplace. Fair enough. Now, I'm not the biggest fan of the management of this company. And even though I like what they're doing, I'm not the biggest fan of the management. So management is important. Like what the company does, don't like the management at all. So that's my take on Vection Technologies. And the main reason behind that was their ridiculous capital raising they did recently. One of the worst capital raisings I have ever seen in terms of timing. They released a really good, there was Appendix 4C, and then the same day they did capital raising. If they did the capital raising a week later, they could have got a significantly higher price. Anyway, let's go to FCT. So why did I talk about Vection Technologies before looking at Firstwave Cloud Technology? Now, I will admit I don't know much about Firstwave, so this will be like one of the first times I've looked at this company. Share price up 15.4% on securing strategic partnership with Amazon. But it's not only Amazon, it's Amazon Web Services. That's right, Amazon Web Services. Apparently, this company is a global leader in IT compliance and network management software. Not sure about that. This company is fairly small, I'm assuming, with that sort of share price, unless they have a lot of shares on the issue. 1.71 billion, markup 27.42 million. I don't know if this company has much of receipts. Let's have a look at the most recent Appendix 4C. I do have a feeling their receipts are quite lumpy, and 2.2 million receipts in the last quarter, year to date 8.2 million. So they do have actually a fair bit of receipts. They just haven't been able to translate that to cash flow positiveness or profitability. Anyway, back onto this announcement. So this global leader in IT compliance and network management software, they're announcing the execution of an agreement that forms a strategic partnership with Amazon Web Services and US-based Coronado technology to further develop and deploy its product suite, including Open Audit, NMIS, and Cybersession on the AWS Marketplace. I'm going to have to admit, I don't know much about AWS Marketplace. Now, probably the other thing is there's not many numbers here. So the collaboration is supported by both personnel and approximately $250,000 funding by AWS and Coronado Technology is designed to streamline the distribution of Firstwave's products through the AWS Marketplace. So I'm assuming this company is a global leader in IT compliance and network management software. Now, sometimes they do have an about section. Yes, they do. Enterprise-grade network management, automation, audit, and cybersecurity software with an estimated 150,000 organizations using Firstwave software. 150,000 organizations using this software, but they don't get much receipts. So the cost for this software is not much. Clients include Microsoft, Telmex, Telstra, Claro, and NASA. Nice client list, but again, not much receipts. Okay, so my main problem with this is I'm not sure how much Firstwave is going to get from this partnership. This could be, I've said this in the past, where small ASX companies, small Australian companies do massive deals, not massive deals, do deals with massive international companies. And most of the time, they don't turn out all that well. Nothing much comes of it. And the main reason behind that is, it's about 10 to 15 years ago, there was a very small company called OBJ, no longer on the ASX. I think they went bankrupt. They did a deal with Procter & Gamble, and I saw it and I went, oh, this could be good. And the share price popped up, and that was the high. Share price then just dropped, then dropped, then dropped, then dropped, and nothing happened with that deal. Because I think OBJ or these small companies are taking most of the risk. And if it works out, fine, because they're taking all the risk. And these bigger companies, they might make a little pittance out of it. And if something goes really, really well, then that's good. But I'd say they do thousands of these deals with small companies on the hope that maybe one or two become really profitable, or maybe more than that. They're sort of like venture capitalists in that way, do lots and lots of deals, these small deals with these small companies. And if it goes well, hey, that's great. If it doesn't, well, we expected it. Anyway, so that's FCT, but we'll have a look at the chart first. I won't have a look at the chart for Vection. It's just that it was really interesting that these two companies released announcements about deals with Amazon Web Services and FCT. Of course, FinChat decides to, not FinChat, what's this called? TradingView. And this is the chart for Firstwave, and I have no interest in this at all. Share price very close to 1 cent as well. I have no interest, even though share price has popped up today. In fact, it was at these levels about 2 weeks ago. 26th of May, it was at these levels, so just over 2 weeks ago. But interesting announcement, I suppose, in a small way. Coming in number 4, EZZ. Life Sciences. I've griped about this company in the past. They don't release anything apart from Appendix 4C, half-year report, full-year report. They just don't release anything. And the reason I gripe about it is because Biome just keeps on releasing updates. So investor webinar, board updates, Biome launches, activated therapeutics, activating probiotics, new product launches. They reported strong sales revenue on the 2nd of April. And then you compare that to EZZ. EZZ just completely silent. They don't do anything to really market, sell their company. So for instance, if you have a look at their announcements or price-sensitive announcements, it's just Appendix 4C, half-year reporting counts, appointing United States manufacturing partner, Appendix 4C, interim dividend announced. And then finally today, they released something of interest. EZZ enters Southeast Asia with multi-year distribution agreement. Now, the reaction for the market was really interesting today. Now, there is actually a number to this one, a minimum purchase value of $21 million over the contract term, which is 3 years. So we're talking about Thailand, Vietnam, and Singapore. One of my other gripes with this company is they're not wholly focused, but they're too focused, too reliant on China. I think they need to diversify when it comes to geographies. They've started to do that with the United States, but I think they need to do that even more. So this is a step in the right direction for EZZ. But the reaction from the market is why it's in the top 5. It wasn't going to be in the top 5. And then I saw the share price had popped up significantly and then has come down significantly. So if you have a look at the trading today, so on Friday, it closed at $1.50, opened at $1.54. So we're talking about share price up a few percent. It went to a high of $1.96. So the share price went from $1.54 to a high of $1.96. So we're talking about the share price rising. What's that? 40. We're talking about share price rising 25 to 30% in a fairly short period of time. And now the share price has pulled all the way back. So a lot of selling coming in today. And I have no doubt the reason we have seen selling is because when people saw the share price getting towards $2, they thought, ooh, now is the time to sell out of this dog stock because the share price has fallen since they bought. So this is a chart of EZZ, a beautiful trading chart. uptrend between April of 2024 and October. So we're talking about a 6-month period when the share price went from 80 cents to $5, and the share price then pulled all the way back from $5 down to $1.20. And I do think there is definitely an argument that this company is really cheap at these levels. It is profitable, they're dividend paying. Market cap is 70 million, but the enterprise value, I think it's like 45 million. Dividend yield 2.6%, PE ratio at 7.3. And I do think the share price has found a bit of a low going sideways, but you can definitely see this with the one-day candlestick. A lot of selling has come in. You'll probably be able to see that just as we go to the 1-minute chart. Yeah, for some reason, a bit of excitement in this company between open and the high, which was reached at 10:37 a.m. So within the first 30 minutes of trading, share price popped up, and then we saw selling coming in. Now, when the share price got back down to $1.62, we can see some buying coming in. You can see these large spikes. That is a bit of buying coming in. So it looks like the market is willing to buy some shares at about $1.62, but they're more willing to sell when the share price gets more towards 2. And the reason we're seeing that is because all these people who bought at high prices, so between about July 2024 and February 2025, a lot of people did buy at high prices. They have seen their opportunity to sell out, and that's why we have seen a bit of pressure on the share price. Anyway, I'm really keen to see how this company has performed in the most recent quarter, which is coming to an end in 3 weeks, the last quarter of the financial year, because the last quarter was a little bit disappointing in my opinion. They're still cash flow positive, but it was a little bit disappointing. I expected a little bit more because that tends to be this company's best quarter because they're focused on China, but for some reason, no. Okay, next on the list, coming in number 3, we have NextDC. Share price up 6.45% on contracted utilization and forward order book update. So data center company, a lot of hype, maybe not hype, a lot of potential upside in data centers. We're seeing like NVIDIA, most of the NVIDIA's growth has been because of data centers. And because of AI, a lot of data centers have to be built. And we have seen a bit of an increase in NextDC's, utilization, contracted utilization. So companies' pro forma contracted utilization has increased by 16 megawatts. I'm assuming MW is megawatts, 7% to 244 since the last update on the 6th of May. So in, 3 weeks, it increased 7%. It's a pretty nice increase. And it looks like most of this, or the largest increase, maybe not the most, but the largest increase was in Kuala Lumpur. Another reason I do like this company is they're expanding overseas. Originally mostly just Australia, but they're now expanding into Asia. The problem I have with that is they do have to spend a lot of money as they build out their infrastructure. So that's my one problem with NextDC, but they are still growing and they're expanding into Asia. Well, they've expanded into Asia, but they're growing out that expansion. Now, originally I was going to put NextDC as my chart of the day, but then I decided to put Metcash as my chart of the day. And the reason behind that is I think Metcash chart looks a little bit more interesting. But NextDC's chart, even though share price had been downtrend, remember all that interest in data centers, that sort of interest died away in the first half of this year, probably towards the end of last year, first half of this year. There's no reason why it died away. It just died. And then I think we're starting to see that interest starting to build back up, and the share price has rebounded nicely. In fact, the share price has increased 50% since the lows. And I'd also say with the share price trying to get above $14, that's a nice little resistance level, and it's trying to break out. So this is on the precipice of breaking out. The only problem is the last time share price was this high, apart from the recent high, but before that. So if the share price does break out, say 14.50, we're only talking about, what's that, a 3-month high, 4-month high? So we are talking about at least a 3-month high. I suppose that's better than nothing. Okay, coming in at number 2, we have Icetana. I just want to say vanilla ice baby, but it's not, is Icetana. And share price up 81.25% on a SoftBank partnership. Again, this is fairly similar than Firstwave. We have a small ASX company that is so small that it probably has a market cap of 10 million, even with the share price. I'm going to actually, maybe 20 million. 12.71 million. Oh, I should have said 10 million to stay with, should have stayed with 10 million. This is a small company. So who do you think is more likely to benefit from this partnership? It's not Icetana. And I say more likely, there's a chance Icetana might benefit from it. Now, this is, what do? They're into AI. I know that. Let's have a look at their about section. So SoftBank robotics. So that's interesting in itself. They build self-learning security AI software for large-scale surveillance networks. Yes, that's what they do. Anyway, so not sure what the relationship between robotics and, well, I suppose there is some security concerns. I have no idea. But anyway, so this particular partnership, 3.6 million strategic partnership with SoftBank Robotics Group. Software Robotics Group also increased their stake in this company by 17.6%. So investment of 1.87 million. I wonder if his 3.6 million strategic partnership includes that, or if it's that's separate. So SoftBank Robotics appointed as exclusive distributor for Icetana AI in Japan with a guaranteed minimum purchase commitment of $450,000 on an annual recurring revenue basis. Now, I suppose that is interesting because if you have a look at the most recent Appendix 4C for Icetana, it's not much. There's not much going on here. We're talking about $178,000 receipts in the last quarter and $617,000 receipts in the 9 months. So this is, I suppose, in terms of how much business this company has created so far, this is sort of a significant partnership because we're talking about, what was it again? $693,000 annually. So $150,000 per quarter. So I suppose compared to what they're already getting, it's a fair bit. But I would say that what I'll be looking for with Icetana is follow-up deals. I need to see follow-up deals. There's one released in March. Icetana AI secures 1.7 million purchase order. That was with a new Iraq-based partner, High Tech. The end user is a Baghdad Safe City project. That's interesting. Value of that contract is $1.1 million US. So they are getting some contract wins, which is interesting. So let's have a look at the chart for Icetana, or Ice baby. And the chart, funny enough, it looks like, no, I'm going to say, yeah, the 19th of March, when they did release that 19th of March announcement, the share price did pop up and then pulled straight back. It looks like the share price also popped up on the 16th of December. Share price actually rose 56% on that day, and then we saw the share price just pull straight back down, which is sort of understandable because the share price was higher not that long ago. So what happened on the 16th of March? 16th, no, not the 16th of March. I am 16th of December. What am I talking about? 16th of December. Icetana announces 3-year deal. So this was Malaysian customer, $465,000, 3-year deal. And on that particular day, yeah, the share price did bounce up and then pulled straight back. So we can see, we have seen this now happen 3 times when the share price has popped up and then pulled back, and it looks like it might be pulling back today. So we have seen a little bit of selling coming in today, but not as much as what we saw the last 2 times. So is this the start of maybe a bit of a positive period for Icetana? Maybe one to put on your watch list. And finally, stock of the day, MVF, Monash IVF, share price down 26.58%. Oh, I should have waited before I bought some shares. So share price is near the low of the day. That is concerning. Share price, we continually see selling. Not enough people saying, oh, I think this is a bit of an overreaction from the market. We aren't seeing enough buying. I'm wondering why people are selling now. Sure, this is a little bit of an incident, and sure, this is a second sort of incident announced in a few days, but both incidents were 2 years apart, I think. And I can almost guarantee you this is not going to happen again. This won't happen again. There is no way this will happen again. If this happens again, every single person in this company should be fired. Well, maybe not everyone, but all the management should be fired. So apparently there's some sort of little mix-up, like a patient's own embryo was incorrectly transferred to that patient, contrary to the treatment plan, which designated the transfer of an embryo of the patient's partner. So it seems like it was a mix-up. I'm not sure how big this mix-up is, but it's not as massive as mix-up as the last time. But I don't think this really deserves share price down 26.58%. I do think this is a bit of an overreaction, but the way I look at it, it should be the last incident that happens at Monash IVF. Sort of like air travel after 9/11, safest time to fly in history when it comes to terrorism. There was not going to be any terrorist activities for years after 9/11. And I know some people who just wouldn't fly because of what happened 9/11. And I was telling them, safest time to fly. Nothing's going to happen. This is the time. So if I wanted some IVF help, I would go to Monash IVF because we know nothing is going to happen. So I do think this is a bit of an overreaction. Now, the company did provide a bit of a negative profit update on the 20th of May, but there was some positive signs in that because there was a bit of a slow period. I think it was in a few months ago, and it looks like it's starting to build up again. So I decided to buy some shares on the proviso, on the thesis that this is a bit of an overreaction, and that's the time to buy when the market is really overreacting. Now, in saying that, the one-day candlestick was horrific, doesn't it? This is the sort of candlestick you don't want to see. So a massive amount of selling coming in today. But that could also be a sign that this is the low. We're not going to see much more selling after today. Why would you want to sell right now? Sure, it's a bit of a mix-up, but that's probably going to be it. I can almost guarantee you there won't be any mix-ups moving forward. This will probably be it. So this is my value. This is my value, or say value persona. And that's how I started investing, looking for value. This is my value persona popping up, saying, "Ooh, value here, value with Monash IVF," after this little dip. Funnily enough, I was looking at Monash IVF the other day, and I was thinking, "Ooh, 70 cents could be a nice time to buy some shares. It might be a nice little support level at 70 cents." And then today, lo and behold, share price has dropped a fair bit. Okay, so that's these top 5 stocks of the day. Now onto the chart of the day. And it's not Monash. It's Metcash, very close to Monash, Metcash. And the company did release something today. Bit of an upgrade. So further strengthening of hardware pillar earnings update. So this further strengthening of hardware pillar was actually mentioned in Capital Brief as the reason why the share price is up. I would say no, it's because it's an upgrade. This was an upgrade from Metcash. So the second bit, earnings update. That's the most important part of this announcement. It was an update. So let's have a look at what they wrote. So they're undergoing the year-end audit process. They indicate that underlying profit after tax for the year will be slightly better than market consensus. That is an upgrade. They've performed better than market consensus, and that's why the share price is up. Now, slightly better, I'm not sure how much that is. I'd like to see like a percentage. But they did give us some numbers here. And yeah, so the market likes it, and the chart looks interesting. Had a moving average crossover back in May, early May, 2nd of May, about a month ago, and share price has reached a long-term high. And when I say long-term high, we're talking about 8 months. So we are talking about more than 6 months. I actually don't mind this chart. And also the value. So P ratio 14.07, dividend yield 5.01%. I definitely find this way more compelling value than Woolworths or Coles by far. It's not even close. If I had to buy one, I'd buy Metcash right now. Sure, it's not the better quality of the three, but it's better value. Okay, so that's all I have for this video. Went a little bit longer than I expected. That's okay. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.